In this presentation, I am going to describe you how you can make use of our volatility software for making intraday trades and positional trades. So basically, this software will solve the purpose of doing intraday trades in the options, intraday trades in the equity, intraday trades in the future. Also, you can do the intraday trade in the commodities. So all the segments are being covered here, including the currency segment, which is being traded in the Indian market. So these two also you can use for making the positional trades, but the holding period of this positional trade should be less than 10 days. So these restrictions we have kept because the volatility used to change its cycle within a period of 10 days. For that reason only we have kept it. Many interesting features we have added into this software. Previously it was a manual edition, and subsequently we have come with the automated edition of this software. So I will be demonstrating one by one how you can make use of this software. So say I have just opened up the intraday volatility software. So intraday volatility software, it has the segments like equity, stock future, index future, and currency future. So what the trader need to do, suppose if I am choosing this equity, then I have to just say, once I chosen this equity, the symbol list will be automatically get added. So here I will be choosing any of the stock. Say I have just taken the State Bank of India. So I am going to choose the State Bank of India. This is in the equity segment, in the cash segment. So then I will be just hitting on this load data. So it will load all the information which is required by this tool to operate. Then I will be just hitting on the calculate button. So this tool has given me at this particular time. So this is being recorded on September 2nd, 2013 at a time of 2 o'clock and 2 minutes. So at this particular time, it is recommending me to buy the State Bank of India at 1527. So the actual stop loss will be 1517. But once you made a buy entry, then your trailing stop loss comes to 1522. So, and subsequent targets was 1530, 1535, 1539, and maximum as per the volatility you can achieve 1558. Same way, if you are selling at 1516, then your trailing stop loss will be 1522, and these are the subsequent targets. And for each target achievement, you have to trail your stop loss, and that trailing stop loss levels also we have given you here. Suppose if you are putting a targets of 1513 once you achieve, then you have to keep your trailing stop loss of 1515. This is nothing but the midpoint of those entry and actual stop loss level. Sometime it will be the midpoint of the target and the entry level. This also gives you some more fantastic information about the trend. So at this particular time, if I'll just go focus on the live chart. So this is the live chart. Suppose if I am choosing that the same State Bank of India, then equity segment, I can get it 1523. The State Bank of India is trading now. 1523. The State Bank of India is trading now, and at this particular point of time, it is telling me the probability of going up is 39%, 38.75. Probability of falling down is 61%. So you have the chances to fall by 61%. You have the chances to go up 39%. And currently you are at 1523 level. 1523 level. So I'll be just waiting for the 1516.65 or 1517 to come, then I can sell this stock, and this will also at that particular time also it will maintain that probability of falling down at this point of time. So this is how you should use this tool for equity segment. Same way if I am going for a stock future, so it will have one more additional information. Suppose if I am choosing SEC, so it will ask me which expiry date I want. So I am just putting the September expiry, and I will be just hitting on this load data. So this load data comes, means it will say that data loaded completed, then I will be hitting on the calculate button. So this will give me at what price I should buy the SEC, what will be the stop losses, what will be the subsequent trailing stop losses. Only one information I have to choose, give one more information, one additional information we have to give, that is the expiry date. So this also gives you that chances of going up is 55%, chances of falling down is 44. If you just take see this live chart information, suppose I have to take the future stock, and if I'm going for SEC, then the future stock of September expiry is quoting at 961. So 961 point something, rounded to 962. So this is telling me if I supposed to buy this one, I'll be buying at 968. For that trade, my actual stop loss will be 955. But I can have a trailing stop loss of 961.55, and these are the targets. So as a swing trader, sometimes you need to close your losing trade and you have to enter a trade which is in the against the trend. Suppose you have bought at 968 this future. So you will be putting a stop loss of 961.55. If this stop loss triggers, you will not be entering the sell trade. Rather, you will be waiting for a breakout of 955. Once this 955 comes, then you have to enter a sell trade. So your buy trade, but you have entered at 968, you will be booking a stop loss at 961.55. So 6 rupees of loss you have taken. Then you have waited. Once the trend comes to 955, then you have to enter. You must ask me, after hitting this trailing stop loss of 961.55, if the price again moves up and goes to 968, whether I should enter the buy trade again? No. At that point of time, you should not enter the buy trade again. But that time also, I'll again focus on this probability of going up and coming down. If the chances of going up is 55.71 and chances of falling down is 44.28, at this particular thing, once I am getting this information of macro information of probability of going up and coming down, so instead of booking the loss at 961.55, I rather can wait till 955, which is my actual stop loss. So though one more means 5 to 7 rupees more I can lose in this trade, but it is advisable if I can hold the trade till 955 without putting a trailing stop loss of 961, because my probability of going up is more, probability of falling down is less. So anticipating that this is a small correction within the uptrend, I may hold this trade for the subsequent targets. So this is how you can use for the stock future. Similar way, you can use it for the index future. You have to choose the option of index future. Then you have to choose the index, expiry date, 3 informations. Before that, if you want, you can clear the buffer so that all the earlier data will be get cleared. Then you can just load data, and once the data will be loaded, it will pop up this action that data loaded successfully. Then you can hit this button, calculate, it will give you the levels. And once you are getting this level, with this level also you are getting the probability of going up, coming down, expected price range, all this information. You also have an option to save this experiment. If you click on this save button, so it will say you that which location of your drive this experiment is being saved, and if you please press OK, then that experiment will be opened up in a Word file. If Microsoft Word is installed in your system, then all the information which is being calculated there, you can just get it in the Word file. So you can save it for your future reference also. So point is, any instrument you wish to trade, just select that instrument, select the appropriate expiry date if any. So after selecting this thing, you have to hit the load data, then you have to hit the calculate button. So this will give you all levels as per the volatility where you should enter the trade. So this is about the intraday volatility tool. So now I am going to demonstrate how you can do the positional trade as per this volatility tool. So just click on that option so that positional trade will open. Then suppose if I wish to do the index future and Bank Nifty 26th September I have chosen. So whatever the instrument you want, equity, stock future, index or currency future, any one option you just choose it here. I have chosen the index future, Bank Nifty, 26th September. And as I have told you, this tool, positional tool, you can use only for a holding period of maximum 10 days. Maximum 10 days. The reason is within 10 days the volatility trend is going to change and that is going to affect your calculation. So till maximum 10 days these levels will be valid. So I have just taken the Bank Nifty. I have taken the number of days of holding is 2 days. So today I am just recording on the 2nd September. I just wish to hold the trade for 2 days. And 26th September I will just do the same way. I will hit the load data option. It will say that the data has loaded successfully. This option has come. And once you got the pop-up, then you have to just hit on the calculate. So it will ask for the number of days you wish to hold. So I have not entered anything. That's why it is saying that please enter the number of days you wish to hold the trade. So I have just entered the number 2 and you have to hit the calculate. So this says within this 2 days period, Bank Nifty is expected to move 9250 from 9,700. So it is expected to move between 8631, which is the last target of your sell entry, to 9692, and it is advising us to purchase at 9,250, keeping a stop loss of 9074. And the macro information says probability, the chances of going up is 42% and chances of falling down is 57%. So as a trader, what will be your decision at this point of time? Suppose if I am taking the Bank Nifty future now. So suppose if I am taking the future index and if I am choosing the Bank Nifty 26 September, it is on my chart 9178. 9178. So as per the current price of 9178, so I got this calculation and now at this particular time I am trading at 9178. So today if I get a breakout at 9074, then I will think of selling Bank Nifty. Selling Bank Nifty. Because the probability or the chances of falling is more, I will keep a stop loss of 9250 and I will be anticipating 8,600 will be my maximum target. However, the intermediate targets will be 9021, 8989 and 8918 and so on. Assume if I got a chance 9250, I have to say after half an hour or 45 minutes if I am getting 9250, whether I should buy or I should leave that trade, because probability of up move and down move, whatever I have taken now, it is saying that probability of falling down is more, probability of going up is less. So whether I should enter the trade or not. So this level at that particular time, if you take one more calculation, then you will be getting a different level for the Bank Nifty. You won't get this 9250 and 9074. You may be getting 9,350 to buy and 9,100 will be your stop loss or sell entry price. So what you can do, if based on this estimate it is saying that 9250, suppose it comes after some 45 minutes of time. Currently we are recording at 2 o'clock and 16 minutes, and probability has already indicated us that the chances of falling down is more, then I will buy, but 2 days I am going to hold it. So it's nothing wrong if I can just take a 9,000 put option also along with this one. Put option also along with this one. So assume 9,250, because probability of falling down is more, though I have got a breakout. But this, after this breakout, this probability figure will change or may change also. I may not change also. But for safety's sake, when I have conducted this experiment said me 9250 I must buy. So, but probability is giving me some fearful factor. During this 2 days period, the chances of falling down is more as compared to the chances of going up. So I have decided to buy Bank Nifty. However, same time I am buying a 9,000 put option along with this, and within 2 days period I am expecting the Bank Nifty to give me a target of 9,692. definitely put option would have decayed by something. But if my fear comes true, if the worst fear which I am having, that probability of falling down is more, if it comes true, then I will be closing my long trade at 9021. Same time, a part of my losses I will be recovering from this 9,000 put option. So this is how you can just initiate the positional trades using the volatility. Then you must ask me how long this positional trade calculation, whatever I have taken, till what time it will be valid. So this positional trade calculation, whatever you have taken, suppose you have initiated or you have calculated in the morning 9 o'clock or 9:15 period. So for the day that is valid, for that particular day it is valid. Any moment you got a breakout, accordingly you have to make an entry but have a close look in this probability of going up and coming down, so that this you can hedge your position and protect your position to some extent. And if the fear comes true, or if the trend has gone against you after you made an entry in this trade, then you must be protected enough and you must recover a part of your losses from that option. So that is what I used to do. And whenever you are doing for this intraday trades, whenever you are initiating any trade for intraday, then these levels will be valid for 1 hour. 1 hour these levels will be valid. So how this 1 hour will work out? So you can think in this terms. Suppose 2 o'clock and 19 minutes I have just recorded this event. 2 o'clock and 19 minutes I have just recorded this event, and you have got that Bank Nifty. We must buy at 9,214. We should keep a stop loss of 9,122. Trailing stop loss works out to 9,169. So this level is valid for 3 o'clock and 19 minutes. So this 1 hour period is valid. Why it is 1 hour? Because the volatility used to have a maximum life cycle. The current volatility, whatever we are calculating, it has a maximum life cycle of 1 hour. So once 1 hour is over, then we have to recalculate it, provided we have not got any entry. Suppose we have calculated, we got an entry at 9214, 9214, then nothing to worry, we can wait for 1 hour. We can wait for 1 hour to get all these targets achieved. But the ideal target will be the target 1, target 2 or target 3. By this point of time, we can think of booking some profit. Suppose you made an entry at 9214, stop loss has not hit, targets has also not achieved. In that case also you have to recalculate. Once you made an entry, you got a couple of targets, say first target or second target. Then you can trail your stop loss and wait for the maximum target without recalculating. The recalculation comes into picture when you have not got any chances to enter during the 1 hour of your reading, or after taking this calculation for future 1 hour, if you are not getting an entry, or you got an entry but you have not achieved the target, not even the target 1, in that case you need to recalculate these levels and you have to make the fresh entry accordingly. So this is how you should use the intraday volatility tool and positional volatility.